Hey, Andy.
Hey Scott, thank you. And hey Jamie, how are you?
Hey, what's going on, Andy? What's up there, Scott? Happy Thursday to everybody.
Yes, yes. Happy Thursday. Got a good crowd in here, and thanks everybody for attending Andy's Trading Studio. I am Andy. I'm joined with my buddy Jamie Hodge, and hope you will learn something today. I think you're going to enjoy one of the stories I have for you today. That was actually, I think, the subject line in the email that went out. So most people who have heard this, they got a kick out of it. So we'll save that to the end there. And let's dive in. Before we do, guys, let's go over the disclaimer here. All right, this is a webinar that is basically for educational purposes only, okay? But nothing that you hear or see should be considered. Seek out somebody who holds a license, like a stockbroker, registered advisor. But we are just going to have some fun and talk about some cool stuff, hopefully. Before we move on, bear with us, regulars in here. We're going to talk about our 5 stars. Okay, I'm sure most of you have been in there by now. It is free for everyone. You do not have to have a subscription to Trade Ideas. It is moderated by Barry. He's a great trader, and he keeps the room very tame. But then also there's some great traders in there. It's not just Barry. There's a lot of good traders in there, and they share ideas. And they also will share cloud links every now and then, so you'll have access to some of the the scans that they're using. And then we have webinars every day at 5 Eastern time, okay? And these are interactive, just like this one. We encourage you to ask questions. We'll stop what we're doing and answer them. This is every day, Monday through Thursday, and we do have myself, Jamie, or Steve kind of juggling most of these, but on Wednesday, we do throw our CEO, Dan Merkin, and our CTO, Brad Williams, for a great little Q&A demo, so you guys can come in and ask questions and see what's the new bells and whistles that may be coming soon. And let's not forget that Friday support session, okay? This starts every Friday at 11 Eastern time, okay? And it goes about 2 hours. Usually all the questions, they kind of run out. People want to move on with their weekend. Place to come, it's a go-to webinar just like this. So you see our screen, you ask the questions, and not only can we talk to you and tell you the answers to your questions, but we can show you as well on the software. So get in there. And TI University, guys, this is a class we started a couple of years ago. It starts with Beginners 101 every Monday at 12 o'clock. And same time the following day, Tuesday, and then we go Wednesday and Thursday is kind of a graduating class. You can come in here. This is open for questions as well. Q&A at the end. If you cannot make here now, this is a great concept. It's a great interface. People are really loving it. It's a way to come in without opening up a broker account, without funding a broker account like many of them force you to do. You just sign up with a subscription for Trade Ideas, and this can be the standard as well as the premium. So, and you have access to the paper trader. It's a great tool. Well, it's here now, okay? So, and it uses our Brokerage Plus interface, which I'm telling you, I've used lots and lots of softwares, and I've never seen anything as user-friendly and cool as the B Plus, the Brokerage Plus module. All right. I think that's it for everything leading up to our agenda for today, okay? We're going to talk about the market recap as we always do. Jamie is going to take over and share some ideas on the Holly. If I remember correctly, all the 3 Hollies were up on the day. Very kind of sloppy, choppy market, but didn't stop the AI from generating some profits. And then I'm going to show a top list. I haven't done this in, I think it's been well over a year. It's called the Global Market Watcher, and it is gosh, is there a lot of questions coming through? Jamie, just hit me up if I need to stop and answer any of them.
Yeah, we're good right now. I will
okay.
bring something up when you get into Brokerage Plus, but not yet.
Okay, perfect. All right. So anyway, the Global Market Watcher is going to look at a bunch of ETFs that are country ETFs. I showed this about oh gosh, it may have been over a year ago. I'm gonna have to look on the chart and kind of good. But anyway, uh, I'm gonna look at it. We're gonna look at the difference now compared to what it looked like a year ago. But you're gonna have to just take my word because I can't go back that far in our servers. But anyway, it's going to be a fun little just session. Look at this, and then something I think you guys are going to enjoy is overcoming fear. This is my real life trading story, and it was quite fascinating when it happened to me in real time, and I'm going to share that with you today, and I think you'll probably like it. All right, so let's back out of this, and if I can, there we go, and bring up these spies. Get a big fat chart here of the SPY. Zoom in a little bit. Looking at this little hammer going back on Tuesday. And well, we've had a bounce like we see now. We kind of sell off a little bit, but it put in the nice little doji there. I mean, a little doji, but more of a tail. But look what's happening here, guys. The last 2 days, we could not get over this fast line. Okay, so because even though this is showing a green candle, a down day, only bear can only move an average that we're not usually in most cases you do when you have a major breakout. You some point you come back and test it, but that's the area I'll be watching tomorrow because 2 days now we could not get above that fast line. So we'll see what happens tomorrow. Let's take a look at the Qs real quick and see if they're below their fast line, and I believe they are. Yes, as a matter of fact, they haven't even touched it the last 2 days. Okay. So something to keep an eye on. This is not huge in the grand scheme of things, but if you're like me and you're a very active swing trader, you keep an eye on things like this. Okay, if you're a long-term investor, maybe you could care less. You're looking at areas down here to see if it breaks. IWM, that's one that had broken finally out of its channel, fell back down, and look what happened. Today, it popped up. So we're seeing relative strength in the IWM, okay? We fell down below the fast line, but we didn't close below the 20 like the other two averages did. And now we popped up, and we're defending. We're on top of this. So that's encouraging. If you're in the small cap of the Russell 2000 ETF, I would be encouraged by that. We're seeing relative strength in the short-term time frame in the IWM, so that is encouraging. And gosh, I'll pull it up, but I'm not going to spend much time in the diamonds because we've seen in here you have one stock that has bad earnings and it'll affect it big time. But nonetheless, even worse than the Qs, it's still that's gotten nowhere near its 10-period moving average. All right, so that's enough of that. Jamie, do you have anything that you'd like to add to the overall market cap?
No. You summed it up pretty good. My scroll bar wasn't working on my questions panel, so I did realize some questions came in, but I think I've got to them all. But no, here we are, just bouncing off that lower range and trying to get back up top. So the week's almost over. Tomorrow's Friday. We'll see what happens.
Okay, yeah, that's true. I think that's an area to watch tomorrow. See if we can get back above, and who knows, we may gap well above it and take off. But that's what I'm watching. If we do not take it out of the open,
of course, barring
all right, Jamie. Well,
tariff tweets, all that good stuff.
Exactly, which is not unusual on a Friday.
I know. I mean, it seems like that's as preposterous as it is. That's been a big factor. I mean, that's kind of what caused the little sell-off that we had a couple of days ago, or 3 days, starting 5 days ago, actually. But hey, that's part of the landscape these days.
That's right. All right. Well, if you want to take over and kind of break down Holly a little bit, you're more than welcome to.
And I see your question there, Marguerite. The fast line that Andy's referring to is the 10-period simple moving average.
Mm-hmm.
Okay, you should have eyes on my desktop here. Just let me make a quick adjustment. GoToMeeting is being finicky when I try to push a button here. There. Okay, should be good to go now. All right, ladies and gentlemen. So, as Andy was pointing out, kind of a strange little range that we had, went all the way down to the bottom, and then before the day was out, almost got it all back. However, Holly if we focus our attention over here on the channel bar, total of 14, 19 total signals between all three Holly modules there. So it appears that the small caps, once again, were the best performers today. You know, this has been a hot topic of conversation with myself and Andy and everybody about, well, we better keep our eyes on the IWM, because when the small stocks come out with Holly, you know, could be some interesting stuff there, and today was the perfect example of that. One of the users or attendees was asking the question about, hey, in the AI, I notice sometimes the signals are late, or the exit signals might be a little premature. So first, let's address the first topic. The signals are late. Well, you have to understand, ladies and gentlemen, everybody experiences latency. So for example, LXRX, let's just go ahead and pull up one of the small cap trades, one of the better performers today. Here we are looking at the LXRX trade on the 15-minute candle, all right? So, you know, let's look at the range here. The signal came out at 394. Now, you know, I trade with the AI frequently. Now, if you're pulling this up manually, well, it all depends on how quickly did you pull it up. Did you pull it up immediately? Were you doing something else? Did you look over and see a trade appear? Yeah, because if you didn't pull the trade up as soon as it came out, there is a good chance that it might have continued in the direction before you saw it, in which case you're thinking to yourself, well, I'm a little late here. But, you know, late is, you know, let's define late. It's going to be different for each and every person. Some people think 2 or 3 cents on a stock is late, okay? When in my head, that's just typical slippage, okay? Have been running on occasion some of these strategies in automation, and I can tell you when you're automating them, average slippage on average, some are going to be more, some are going to be less, but anywhere between 3 and 7 cents typically is what I'm experiencing when I'm doing some of these things from an automated basis. So from a manual basis, maybe a little bit worse than that, but hey, we know that stocks don't always go immediately. This is a great example here. LXRX finished the day up 8%, right? Holly gets in it right here at 394, issues the signal, goes sideways for a minute, and look. Once again, pay attention to the green line, which is the 10-period SMA. That's the fast line. Stock actually pulled back a little bit from the time that we got into it, or the time that Holly called the signal. So 15, 30, 45 minutes later, you have a chance to get a better price than when Holly came out, all right? Anywhere in this area right here below the blue line, you're getting a better price, and you're using this 10-period average as a little safety net, and it hugged it perfectly before popping back up here, going past the original entry signal, and then heading higher for the remainder of the day. But other than that, there are a lot of good characteristics about this chart that I like. Clearly, there was a buyer on the open, as we can see from this big wide range green candle here. Get a little sideways action. So kind of a perfect setup. Holly, or the AI, I should say, if we look at this entry signal, we have what I like to refer to as an auxiliary pattern playing out in addition to the statistical probability that Holly brought to the table in the first place, all right? And we can see, I drew that line there, perfect range break. Now, sometimes they go immediately. This one took a little breather, but pay attention to the hard-coded stop. Yeah, it got a little soft, and, you know, this is quite normal in trading. Sometimes they go immediately. Sometimes we have to sit a little pullback. This was a perfect case. But if we're paying attention to the fast line, plenty of opportunity to get a better price in the AI. And whether we use the bodies of the candles here, or if you're a big stickler for the rules, we would have to include this wick up here. But check out what it does later. It sets up nicely again for a push through that level again. Later on down the line, we get a true break of the high and then a move higher. So we had statistical probability on our side right off the bat. We had a chance to get a better price than the AI here. And we had 2 chances in case we wanted to bolster the trade or leverage it a little bit more by adding shares based on these range breaks here. On top of that, check out the volume. Lexicon Pharmaceuticals finished the day just a little bit shy of 3 times relative volume. So we can add that to the list of positive attributes about this trade as well. So all in all, just a very well-behaved trade, towing a line on the 10 period and ending up quite a nice percentage by the end of the day there. Okay, now we had a duplicate trade here, but we can see it was two different modules that triggered the EXPR trade here today. Sometimes we'll see duplicate strategies from different modules trigger the trade at the exact same time. This is not the case with the EXPR. The first one, Mighty Mouse, triggered it from Holly 2.0 at 9:08 Central Standard Time. Not a bad entry price, okay? 468. Looks very similar to what we saw in LXRX. From the time that Holly called it here, we went sideways for a little bit, just kind of ebbing and flowing. This one got a little bit closer to the hard stop, but not quite. And you know, that's why we have hard stops. So if we're wrong, this is our maximum pain threshold. We'll punch out. Did not get there. Now, I also like that little wick that was put in there. It tells me that the sellers tried to take control, brought it down here for a bit, but in the end could not hold it down, pop back up, going sideways again. And then shortly thereafter, we had another signal come from NEO for the pullback long. So initial trade here, trade is trying to get a little bit of traction here, takes a pullback, second strategy kicks in, says buy. So in essence, a double buy signal in EXPR in two different time categories, or two different times, I should say here. So once again, what are some of the positive things that we can take away from this? Well, look at the way this one finished as far as relative volume goes. 5.48 usually only kicks out about 1.5 million on a 3-month average. Finished the day 6.5 million. All right, those are strong. Seeing all these wicks here should be tells. Sellers try to take control, they just can't, snaps back up. And then shortly after the second signal, we have that same auxiliary pattern playing out in the form of a nice clean range break. All right, once again, the stock adhering to that 10 period fast line about as well as you could expect or hope for. So this leads us to the exits that the AI is signaling. And you know, if you're a regular attendee, you know, I probably sound like a broken record here, but it's because nothing changes in this regard when it comes to the AI and the exit signals, because the true superpower, so to speak, all right, of the AI is the statistical probability that it brings to the party every day, all right? The exits, well, we all know that the AI is not the best at exits because it's just using pre-programmed variables with the timed holds, stop loss is triggered, or maybe a profit target gets hit. And then it's got the audibles here, in which case these were the reduced audibles that the AI kicked into gear, which is basically just a different version of a trailing stop. But from a chart perspective, the AI is more prone to exit these when we get sideways activity. These are classic reduced risk exits that can actually, if you get attuned to following the AI, can actually be good entry signals. And these are two classic examples. If we're already in the trade and we see the AI exiting and we're like, yeah, hasn't went yet, but I like the action that's taken place thus far. So when you see the AI exiting, you can go, you know what? I'm going to assess, I'm going to take on more risk, what we used to call risk on, and take more risk and ignore the AI's exit signal. So if you're in it, you can ignore it, take on more risk, and it certainly would have paid off today, a small loser versus an 8% winner going into the close there. Pretty big difference between conservative profit and moderate profit, -12 versus 128. On this first batch here on the EXPR, $8 loss versus a 124 gain. And by the way, all these numbers that you see right here are based on risking $100 per trade. So a little bit over 1R on these top 3 trades here, EXPR ×2 and LXRX. But a lot of these are the same type of, you know, auxiliary patterns playing out, and the more time that you spend with the AI, the easier you're going to be able to identify these in the future. So just keep that in mind. If you're in a trade and you see the AI exiting prematurely with a reduced risk or a profit save, you might want to think about giving that trade a little bit more time. If you're not in the trade, it's always a very good habit to, when you see the AI exiting on a reduced risk or a profit save, eyeball that chart, because once again, right here in these levels right here, you had a chance to get a better price than the AI, plain and simple, okay? Just by observing and, taking into account the wicks and things of that nature. Okay, put in its bottom right here and then it never even saw those levels again. Hey, how's it doing on the 10 period? Pretty good. We got big volume, all right? So it's second nature to me. As a new person out there, it's going to take you a little bit of time, but that's going to come from just interacting and watching the AI on a day-by-day basis. We always equate it, since Andy and I are dinosaurs and we had to start back in the day and actually go to a trading office that was equipped with the technology that we needed. We would have given our right arm to sit next to somebody that knew what they were doing. Well, you have that in the AI. The AI can teach you just by you observing. Okay, this is a statistical weighted play. Are we going to have losers? Of course. All right. But at the end of the day, if you get used to watching these reduced risk and profit save entries, or exits, I should say, then you have the potential to get better prices than the AI and still be in a nice winning trade. And of course, we're looking at the winners here. Not the best day for Holly, on this assortment of 19 trades here. If we say 94, 120, 150, so based on 100 shares, you'd be up 150 bucks with no slippage here, but around about 150 bucks on that amount of trades. Not the best day, especially if you're still paying commissions, but we all know what's happening in that space. Zero commission will be here pretty soon. Hopefully we'll have a broker-dealer plugged in with zero commission, and then the landscape changes even more. Fortunately, advantageous to us. So any questions out there, Andy, that I need to address regarding the AI, or if not, I'll just pass it off back to you.
Thanks, Jamie. No, you did a great job. I'm not seeing any questions in the questions panel. Wait, we just had one come in. Let's see, which Holly risk mode is currently getting the highest percentage return? I would have to say moderate, wouldn't you, James? Jamie?
Yeah, I would. And of course, we used to say risk on, risk off, and full risk, right? And we changed risk off to conservative profit, risk on to moderate profit, and full risk is now aggressive profit. Okay, so yeah, most of the time here lately, it's been moderate profit, but it can be different for each and every module. Okay, it's
yes,
on these choppier days, a lot of the times conservative or risk off wins the day, but if there's a lot of pullbacks, but to get a little bit more specific there, Brian, we have been tracking the AI in the conservative mode since it first came out in 2016. We do have coding in place to start tracking all of the different modules or all the different risk parameters. But right now, trying to predict which one's going to win the day is a little tricky, because it all is based on, did we gap up, did we gap down, are we going up, are we going down, are we trending, or just making higher highs and pulling back. But good question nonetheless.
All right, thank you, Jamie. Let's see. Ashraf asked, is there other brokers interactive? No, Interactive Brokers right now currently is the only one. We are in talks with several others, so it's just a matter of time. It's just a matter of time.
Yeah, and lastly,
but we don't have an ETA on that. I'm sorry.
Yeah, I was just gonna say, before I kick it back over to you, addressing Brian's question there, can you quickly describe which Holly is turning into what? And I think you might be getting at the fact that we've alluded to the project of consolidating the AI modules and just making it one AI, and that is still on the drawing board. We're just trying to figure out the right way to do it. So instead of seeing all three modules, you'll just see one Holly module. It'll all be consolidated. We're currently in that process. We just haven't gotten there yet. Okay, let me kick.
And there is. Go ahead, Jamie.
No worries. I was just saying I'm going to kick it back over to you.
All right. Yes, and we are looking at working on swing trading strategies right now to have a swing trading AI. Once again, these are all in the plans, but we got a lot of irons in the fire right now. So no ETAs, but hopefully coming to a holly near you. So, all right. So Waleed was nice enough to hit me back channel and tell me when his global market watcher was dated in his cloud. So I shared it with him on October of 2018. So a little over a year ago, I talked about this. So let's go back in the chart here and let's find October, and we can see it right around here. And the 18th would be right around here. If I scroll back, you can see we weren't far from, you know, all-time highs, maybe a good 2 or 3% there. But what I was sharing at the time is as we flirted around with all-time highs in the SPYs, I pulled up this global market watcher. And trust me, guys, unfortunately, I wish I'd taken a screenshot because I can't pull up the data going back that far in here. But there were only about 4 or 5 green ones in here. The SPYs by far was beating everybody except for, there was one that was doing really well during that period. I'm trying to remember which one it was. Anyway, but there was only about 4 or 5 green ones for the position and year range, and all the rest of them were red, and a lot of them were near year lows. And my argument was, is we are going to have a hard time going to all-time highs with these other global markets trading nowhere near their all-time, or I should say, year highs, not even all-time highs. We're talking about year highs. And it wasn't just the ones you see down here right now, like Malaysia, Poland, Peru, Saudi Arabia. Probably doesn't surprise a whole lot. Hong Kong, what's going on over there? That makes sense. But these were some major European countries. We're talking about Germany. We're talking about
Hey,
Ireland. We're talking about the UK. I'm sorry.
Hey, can we just do this? Can you move one of the windows on your desktop around? Let's see if we're seeing things properly, because a couple of people are telling me that they can't see your screen.
Yeah, you stopped showing your screen. I thought
can't see
that was on purpose.
Oh, let me try going in here again. Let's see. I hope it's not. Well, it says I am. Let me go do this real quick. Go off and let me go back in. Go back in here. How about now?
It looks unchanged. Here,
Jamie, why don't you take it over?
Yeah, I'll grab it
and send it back to me.
Kick it back to you. Okay. So there's my screen, right?
Well, let me see if I got some issues. I don't have yours.
Okay, they're telling me that they can see my screen. So now I'm going to make you presenter again.
Okay, I am having issues because it's not. I may have to log out of GoToMeeting and come back in.
Moving forward, keep an eye on these guys, the small caps. Once again, not the time.
Jamie, I am back though.
Okay, let's see if we can see your screen here. But yeah, VHC, we were talking about that one.
Is it showing?
Mm-hmm.
Okay.
Now try to move a window
it'll
around.
Stay.
Yeah, try to move a window around. Let's see if we can see. But I do see the global market watcher.
But the major averages in these global, especially the ones like in Europe, they were, the UK, Belgium, Netherlands, Ireland. They were all down here toward the bottom and trading near lows. Now, as we got up here and got this double top and we finally went through in the spiders, okay, it's a different backdrop, a total different backdrop. And I'm going to share this with you again for those that do not have it. And it's a good thing to pick up every now and then, especially if you're wanting to get an overall picture of the global marketplace. And you can just kind of look at these position and range, especially the yearly range. And if you see, like if you see the spiders that are still hanging out near all-time highs, and you see a lot of these other markets dropping off, beware, because last time I showed this and all the other world markets were doing very bad, we eventually sold off pretty hard going all the way into the end of last year. I think everybody remembers that ugly, ugly dip we had last year going into the end of the year, and now we finally bounced back. And it's a total different backdrop now, guys. So that is why we have a little more staying power in my mind. Okay, it is a global marketplace now, and even though the U.S., is by far the strongest economy, you still need to keep an eye out for what's happening around the world. So that I thought I would share that. And let's take a look. Look at New Zealand. Man, they're up here lifetime range. Spies, of course, is going to be up here with it as well, but we also have some other ones. Netherlands strong. Look at Japan. Japan's not far from a lifetime high. So we have some markets. Canada's doing pretty good. In Germany, France. So we have, some important big markets that are near, maybe not all-time highs in all cases, but at least yearly highs. So I think that bodes well for the health of maybe our markets. We all know that can change on a dime, much like it did in 2007, 2008. But hey, for right now, everything is looking pretty good. Jamie, everything still good out there?
You are good from what I can tell over here,
good.
sir.
That's good to hear. All right, guys, now for my real life trading story. Let me just bring over, put some not a timeline, but just kind of some Word doc together. And we're going to go through it step by step instead of me just rattling off looking at a blank page or a chart. Yeah, grab the popcorn, Wally. This is, it's kind of interesting. Let me get me a drink of water. Let me preface this. There's two things that run traders out of the market, okay? It's fear and it's greed. And you've all heard fear and greed. Well, I can tell you this, most of the time it's fear, okay? And ironically, as I've watched traders over the years, it's usually the ones that don't have a huge account, don't have a lot of family money, don't have a lot of money, that seems to fail, with fear, because of fear. And vice versa, that seems like the people that with a lot of money, a lot of times they fail because of greed. They get just too greedy, load up, and they're just, but those are the two biggest factors when it comes to not being a successful trader. You got to overcome those two emotions. And I'm going to show you kind of what happened to me, and it's a real life story, and maybe you can garner a lot from it to apply to maybe what's happening to you as well. So without any further ado, let's go just kind of drop this down here. Okay, in 1998, I sold my house.
Hey, so Andy,
okay?
I hate to interrupt, but are you showing the text? Because we see two versions up there.
Yeah, you don't see me scrolling down in the text up here at the top?
Oh, are you just using that as a little, okay, I got you, never mind.
Yeah, this is my little window there, yeah, instead of showing it all at the same time. Yes, I'm just going to show it, Deborah, one line at a time. Okay, Mike said it's fine. All right. I had just gotten out. I was a general manager in a car dealership. I've been in the car business for about 5 years, and gotten out of it, and was going to be a broker for Edward Jones. I actually was hired and was training and doing prospecting and things like that, but that's not what I wanted to do. I wanted to trade, okay? My heart was in trading. So after about 4 or 5 months with Edward Jones, I sold my house, and and it took about 50K and opened up a trading account. All right. Steve Gomez, I started about the same time. I think he was there a month before I was. So that's how me and Steve got together and been lifetime partners in business and trading and everything else. now, but it worked. And we paper traded for about 3 weeks. All right, and then we had no idea generation software. You guys don't know how lucky you are to have an idea, something like trade ideas. Back then all we had was a simple high-low ticker, no volume, okay, filters or anything. It was just stocks hitting highs and stocks hitting lows. It was moving very fast, so it basically told you nothing really. But it was nice to have back then. We didn't know any better. Okay, for about I focused for the first couple of months, way back then when you got learned, you just kind of focused on about 4 stocks, and that's probably still good today when you're learning the basics of trading. You just kind of want to get the feel of trading, and so you just kind of focus. You got to learn the executions and all about the bid and ask and all that. So that takes a while. So I think a lot of people still do this. And then I ventured out. All right, this is where it gets interesting. After 8 months of trading, my account was down to, yes, we did have level 2. We sure did, Mike. We had level 2. After 8 months of trading, okay, my account was down to $8,500. Okay, so this is started with a 50K, was down to about $8,500. I'm going, oh crap, what am I going to do? Let me pull this up a little bit and grab this page. All right, so I remember, I knew the time was ticking away. Okay, I didn't really have the funds left, so I knew my days were probably numbered. It was kind of, kind of bittersweet. I was telling myself, you know what, I'm gonna go home, update my resume. If it doesn't work, and so be it. So I went home, I updated my resume, started thinking about, looking for jobs where I might interview. But the manager there, he really liked me, and he thought I had potential, so he gave me 10-to-1 margin, because it's very hard to trade on 8,500 when you're, looking to make some money day trading. So he gave me 10-to-1 margin. Back then, you could get away with stuff like that. All right. During the first 8 months, I was trading off a lot of fear. Okay, that was my only source of income. Okay, and I was basically living off my savings. So, and I knew it. Okay, I knew that fear was there. I could feel it every time I got into a trade. I was just like, it wasn't right. It wasn't natural. I wasn't comfortable. And it was because of the fear. It's just like, okay, my savings is running low. I only have $8,500 left. So what happened is, I told myself, and I remember this just like it was yesterday. Okay, I told myself, what the heck? I'm getting my resume ready. What's the worst thing that can happen? Okay, I have to get the monkey suit and go back into the workforce. I was qualified to do a lot of things back then. Okay, I won't get to trade for a living. That kind of sucks. I really like it, but what the heck? I'm going to go back, do my resume, and just go back into the workforce. Well, when I accepted that, guys, I'm serious, the fear just left me. There was no fear at all. I was going to accept the outcome should I not be able to succeed. So it was like I just totally relaxed. I started immediately trading better, even though my account size was still down, below 10,000. I had accepted the fact that I am not going to be afraid anymore, because I don't need to be. What's the worst thing that can happen? I'm still alive. I still got my family. They love me. I still got my health. I can go out and find a job. So to wind down, okay, once that fear was gone, over the next 12 months, I made over 300K in profits. And I'm not going to blow smoke up at you. I'm not one of these guys that made millions and millions of dollars in the stock market. That didn't happen, okay? But I did make a good living, a decent living for 17 years day trading. And it was all because I was able to basically let go of that fear. And it's funny, once I started making that money, then greed became a problem. So you're really walking a fine line. You really are. I mean, because I don't want to tell you not to trade with a little bit of fear, because it really is a fine line. You cannot just go, all out and just say, well, and because that's when greed comes on, and you can have some really big losers. But anyway, that is a true story. That's my story. Now, honestly, some of that has to do with me becoming a better trader. I'm not going to say it all had to do with the fear, but had I not had that moment where I just, said, what the heck, I'm not going to, I'm not going to stress out and fear about this anymore. Worst case scenario, I just go get another job, and that's fine. I can do that. So, and my last statement is, you're right. It happened overnight. That's the one thing. It's almost like those guys when you ever see those 3D puzzles, and you just have to stare at them forever and ever, and you can't make sense of it. And then when you kind of just relax and let go, it all of a sudden comes to you. I kind of, it's kind of like that. It really is. You have that moment where all of a sudden you're in a groove, and it was it was overnight. I basically turned it around overnight, and I think over the next 3 months, it's like the next 3 months, I already had my account back above the 50,000 that I had in there to begin with.
And Andy, since we know a lot of guys that have been in the business a long time, what you're describing there, man, same thing happened to me. Same thing happened to
Is that
Dan.
right?
Yeah. I mean, everybody would love to just start off gangbusters, but in reality, most of the time you do eat into your capital. Now, do you lose half of it? Do you lose? I think I lost 2/3 of mine before I turned the corner, but that was the norm back then, and I'm sure things haven't really changed that much. You're not going to meet very many people that are in the trading business they're just going to be like, oh yeah, since day one I've just been profitable. That's not saying that there's not a few people out there like that, but as far as the norm goes, most of the time you do lose part of your capital before you get in the groove.
You're exactly right. You're right, James. And that's what's so great about the new paper trader that we have. People that are excited. I talk to them all the time. They're coming in here and they're like, wow, I can just trade on your software. And I think, you're really not going to truly know what kind of trader you are until you put live money on it. But I think people, should trade the paper trade probably longer. If I had to do it all over again, because at first it's all about capital preservation. And if you could come in here and trade for 2 or 3 months, paper trading, hopefully you have the capital to do that. If you're not, you're probably kind of like I was back then. You're going to have to let go of that fear and just give it your best shot. But it does take time. Now, I think with the advent of these trading softwares, especially Trade Ideas, it can take your learning curve from 6 to 8 months down to 3 or 4 months, maybe even 5 months. But yes, Jamie's right. You do have to learn, and that 8 months of hard knocks and staring at the market for hours, 6 to 7 hours every day. Yeah, you can't. That's great screen time, and it'll definitely help you. You're welcome, Waleed. You're welcome. Yeah, I thought I'd share that because I think if people can overcome that fear, I think a lot of them would be better traders. That's why, there was times during my trading where I was going over to China. I had a really good deal with, they pay me some good money to go over there once a month for a week long. So I had all that extra income coming in. So that's when I had my best trading, and it's because that helps you take away the fear. If you do have another source of income, whether it be something odd job at night or whatever, but having that other source of income, it really helps. All right, Jamie, if you don't have anything, you're welcome, Randy. Yes, yes. You're Randy's right. He said, thanks for sharing, Andy. I think we all started that way. Yes, you're right. To some degree, you're exactly right. No, yes, Drora, yes, that's everybody has that story, and you're not alone. But I can tell you, I wanted to share that because uh, I think a lot of people struggle, but they don't realize it's the fear that's really holding them back. Mike had a story about some people using Adderall. Okay, to keep up. All right, guys, I'm going to bring, thanks for all the comments there. I'm going to bring Scott in. You guys hang on. He'll have a little discount code for you. And Scotty, if you want to come in and walk us out.
Yeah, thanks, Andy. That sounds good. Yeah, grab these ebooks. Andy and Jamie both contributed chapters. We released them not too long ago. There's 3 books, 2 chapters each. It includes cloud links to the concepts that they're discussing in them. Just go to the URL trade-ideas.com/setup and put in your email to download them. Podcast, we'll probably have a new episode out tomorrow. We'll see. Just search for Trade Ideas Podcast wherever you listen to podcasts and sign and subscribe, and that'll get you the next episode. Also, check out previous editions. There's a code, Holly Season, all caps. It's good for 15% off your first month or year of Trade Ideas, so take advantage of that before it expires. It's also good for upgrades, so if you're on standard and upgrade to premium, just use that code. You can follow Jamie on Twitter at QuantBot. Also follow at TodayTrader and Trade Ideas. Facebook.com/TradeIdeasPro is the page to like on Facebook and share stuff with your friends. Info@TradeIdeas.com is the best URL to send any of your questions to. We're going to have a recording of this up later on tonight or tomorrow, so stay tuned for that email tomorrow with a link to the playlist. All right. Thanks, everyone. Thanks, Andy and Jamie.
See you guys
Thanks,
tomorrow.
Scott. Thanks, everybody.